One of the most important jobs for an accountant at a manufacturing company is to answer one simple question. How much does each item cost to produce? Having accurate cost information allows management to make decisions about which products to produce and how many. In accounting, there are two ways to come up with the answer to that question. Those are job costing and process costing. This video is really about job costing, but we are going to talk just a little bit about process costing. Specifically, when would you use this method? Process costing is the best choice when the items produced are exactly the same, homogeneous. For example, let's imagine a factory that makes chicken noodle soup. All day long, that factory might run multiple batches throughout the day, but every single time they are making identical cans of soup. That's all we're going to say about process costing for now. Now let's talk about job costing. Job costing is appropriate to use when there is some kind of customization of our product, or simply when we run different batches of items throughout the day. For example, if you were a screen printing shop, you might run one batch of University of Utah t-shirts, and then later in the day you might run a batch of BYU t-shirts. The batches you run throughout the day are of products that are not the same. Now let's go into more detail about how job costing works. I want you to envision a schedule called the job cost record. The job cost record first is labeled with the job number on top. And then there's a section for each of the three manufacturing costs of the job. We learned about these manufacturing costs before. They are direct materials, direct labor, and manufacturing overhead. We're going to make a section for each one on our job cost sheet. Under job costing, you get a total for each of our three types of production costs, and then add them all together to get the total cost of the job. So how do we get those figures? Let's start with direct materials. For direct materials, we're going to add up all of our requisition forms. And requisitions is just the name of the process that someone has to go through at a company in order to take materials out of the stockroom and issue them into production. As we learned before, direct costs are exactly traced to the inventory items, which means that we can come up with the exact number of requisitions and calculate the exact dollar amount of direct materials that were used on any particular job. For purposes of our example, let's say that we looked at our requisitions and we determined that direct materials of $5,000 were used on this job. Now let's talk about direct labor. Just like the materials, since this labor is direct, it means we are already exactly tracking how much assembly line labor was applied to this job. That labor is tracked on labor tickets. So in order to figure out how much direct labor costs for a particular job, you would simply go back and find all of their direct labor tickets for that job and add up the total to figure out the amount of direct labor to assign to the job. For purposes of this example, let's say that we found the direct labor tickets and determined that $2,500 of direct labor cost related to job 314. Now we get to manufacturing overhead. But manufacturing overhead is not direct. It is, in fact, indirect. That means we have not tracked exactly how much manufacturing overhead belongs to each job. So how are we going to come up with a dollar amount of manufacturing overhead for the job? In order to do that, we have to do a process to allocate overhead to the job based on some estimates. Now let's talk about how that allocation is done. The most basic way to allocate overhead under job costing is called the predetermined overhead rate. To save space, I'm going to abbreviate it as the POHR. By calculating this rate, it will allow us to do a basic calculation to assign some overhead costs to our jobs. Here's the formula to calculate the predetermined overhead rate. You take the total estimated dollar amount of overhead for the entire year, and you divide it by the estimated total use of the allocation base, also for the entire year. Your next question might be, well, what is the allocation base? The allocation base is a metric that you can track about a job that you think correlates to the amount of overhead costs that that job actually consumes. Examples you might see of potential allocation bases are the direct labor hours required for the job, the machine hours that a job takes, or sometimes a percentage of the direct materials used, or a percentage of the direct labor cost. So when you are doing any question requiring you to calculate the predetermined overhead rate, it is very important for you to look at the question and see which metric is being used as the allocation base. Let's do a quick numerical example here. Let's say that we estimate total manufacturing overhead for the entire year to be $1 million. Let's also say that we have chosen direct labor hours as our allocation base, and we have estimated that total direct labor hours for the year will be 40,000. Based on our formula, we would simply divide the total estimated overhead by the total estimated cost driver to come up with a predetermined overhead rate of $25 for every direct labor hour. Now that we have calculated our predetermined overhead rate, now we can go up and actually use that to allocate overhead to our particular job. In order to do that, we need to know one thing about job 314. We need to know how much of the allocation base did this job actually use. In this case, since our allocation base is direct labor hours, we need to know how many direct labor hours were consumed by this job. And for purposes of this example, let's say this job took 40 direct labor hours. Now we can do a quick calculation and say, okay, the job took 40 direct labor hours, and we're going to multiply it by our predetermined overhead rate, which was $25 per direct labor hour. Multiply those two together to come up with $1,000 of overhead to allocate to this job. So we calculate the 1,000, then we're going to put it right over here on our job cost record. Now that we have a dollar amount for direct materials, direct labor, and an allocated amount for manufacturing overhead, now we can compute the total cost of job 314, which would be $8,500. In order to convert this to the cost per unit, we need to know one last bit of information about this job, and that is, how many units did this job produce? For purposes of this example, let's say that job 314 was producing 200 units. Then to get the cost per unit, you would take 8,500 total job cost and divide by the number of units produced to get the cost per unit, which gives us a per unit cost of $42.50. This is the figure that we would then take to management and say our production cost per unit is $42.50. So to summarize, under job costing, we accumulate each of our three types of production costs on the job cost record. Once we have a dollar amount for each of our three production costs, we can then calculate the total job cost and divide that by the number of units produced to come up with the cost per unit. Since we do not exactly track overhead costs, we need to go through a process of allocating overhead based on some estimates in order to get an estimated overhead figure to use in our job cost record. This concludes our summary of job costing.